Hi everyone, my name is Alice Rowling. I'm a recent Juris Doctor graduate from the Melbourne Law School working in the Melbourne Law School Tax Clinic, or the MLS Tax Clinic for short. The MLS Tax Clinic is a supportive, inclusive, student-run clinic where you can receive free tax assistance from Melbourne Law School students either online or on campus at the Melbourne Law School. We are a part of the National Tax Clinic program, a government-funded initiative to help people who may not be able to afford professional advice and representation with their tax affairs. Our students are supervised by a dedicated clinic supervisor and experienced tax practitioners. To apply for assistance, please see the application form on the MLS Tax Clinic website. Today, I will give you a brief outline of the Medicare Levy, how it works, and any reductions and exemptions that can apply on behalf of the MLS Tax Clinic. Understanding the Medicare Levy is important, as it helps you know why a portion of your taxable income is taken to pay for Medicare. In this presentation, I will discuss an overview of the Medicare Levy, reductions to the Medicare Levy, the Medicare Levy surcharge, exemptions, some examples, and provide some further resources. The Medicare Levy is an amount paid by taxpayers in Australia based on their taxable income to help fund the costs of our public health system. The Medicare Levy is currently 2% of your taxable income. It has been 2% since July 2014, but it is subject to change. You may get a reduction or an exemption from paying the Medicare Levy based on your income and circumstances and those of your spouse. You may also be subject to a surcharge if you're a high-income earner without private health insurance. Your Medicare Levy is calculated when you lodge your income tax return, but the amount that your employer withholds from your pay generally includes an amount to cover the levy. You need to consider your eligibility for a reduction or exemption separately. You don't have to pay the Medicare Levy if your taxable income is equal to or less than the lower income threshold. For the 2022-23 income year, this threshold was $24,276. Your Medicare Levy will be reduced if your taxable income is above the lower threshold and at or below the upper threshold. This reduction is worked out for you by the ATO when you lodge your tax return. For the 2022-23 income year, this upper threshold was $30,345. You may still qualify for a reduction based on your family taxable income if you meet the following criteria. Firstly, your individual taxable income was more than the upper threshold for a reduction based on being a low-income earner. Secondly, you had a spouse, married or de facto. You had a spouse that died during the year and you did not have another spouse before the end of the year. You are entitled to an invalid carer tax offset in respect of your child. You had sole care of one or more dependent children. Your Medicare Levy is reduced if your family income is below a certain amount. In some cases, you may not have to pay this levy at all. In the 2022-23 income year, you did not have to pay the levy if your family income was equal to or less than the family income threshold. Any levy payable was reduced if your family income was above the lower family income threshold and at or below an upper threshold. The ATO will work out any reduction for you when you lodge your tax return. The lower family income threshold for the 22-23 income year was $40,939. The threshold increases by $3,760 for each dependent child. The upper income threshold was $51,174, and this upper income threshold increased by $4,700 for each dependent child. Family taxable income is either the combined taxable income of you and your spouse, including any spouses that died during the year, your taxable income if you were a sole parent. Sole care means you alone had full responsibility for the upbringing, welfare, and maintenance of a child or student. You aren't considered to have sole care if you are living with a spouse, married or de facto, unless there are special circumstances. For example, if a spouse is medically incapable of assisting you with the care. If you don't qualify for a reduction in the Medicare Levy, you may still qualify for a Medicare Levy exemption. It's possible to claim a full or partial exemption from the Medicare Levy if you firstly, for all or part of the income year, had one of the following medical conditions. You were a blind pensioner. You received a sickness allowance from Centrelink. You were entitled to full free medical treatment for all conditions under Defence Force arrangements or a Veteran Affairs Repatriation Health Card. And secondly, you must also have met one of the following conditions. For a full exemption, you had no dependents. If you did have dependents, they either qualified for exemptions or paid the levy themselves. If your dependents are also your spouses, they meet the conditions set out by the ATO, and you have a family agreement stating your spouse covers half the levy for joint dependents. And if you're single or separated with shared care and you have a dependent child not in an exemption category but receive Family Tax Benefit A or its rental assistance, you're fully exempt for days without the care of your child. For a partial exemption, you have at least one dependent who was not in an exemption category and didn't have to pay the Medicare levy. You're single or separated with shared care, and you have a dependent child not in an exemption category but receive Family Tax Benefit A or its rental assistance, you're partially exempt for the days you do care for your child. If you were a foreign resident for tax purposes, for the full year, you can claim a full exemption from the Medicare levy. If you were only for part of the year, you can still claim a full exemption from the Medicare levy for that period if you didn't have any dependents for that period. All your dependents were in a Medicare levy exemption category for that period. You claim this exemption when you lodge your income tax return. This exemption is known as Exemption Category 2 on your tax return when you complete the Medicare levy section. Figuring out if you are an Australian resident for tax purposes can be tricky, but it's really important because it has significant implications for you as a taxpayer. I won't be talking about residency in this video, but we have a helpful video below on our website that may be of assistance to you. You can claim a full exemption for any period that you have a Medicare entitlement statement showing you are not entitled to Medicare benefits because you were a temporary resident for Medicare purposes, and you either did not have any dependents for that period, all your dependents, including your spouse, were also in a Medicare levy exemption category for that period, you are a member of a diplomatic mission or consular post in Australia, and meet other conditions. If you qualify for an exemption, you claim the exemption through your tax return. This exemption is known as Exemption Category 3 on your tax return when you complete the Medicare levy section. A Medicare entitlement statement from Services Australia shows the period in an income year that you were not entitled to Medicare benefits. If you have a Medicare exemption statement, it doesn't automatically mean you are exempt from the Medicare levy. All your dependents are also required to be in a Medicare levy exemption category. If you have to pay the Medicare levy, you may have to pay the Medicare levy surcharge if both you, your spouse, and your dependent children do not have an appropriate level of private patient hospital cover, you earn above a certain income. The Medicare levy surcharge is an amount you pay on top of the Medicare levy. The Medicare levy surcharge, known as the MLS, is a rate of 1%, 1.25%, or 1.5%, and it's levied on your taxable income, your total reportable fringe benefits, and any amount on which family trust distribution tax has been paid. You will not pay the MLS if your income is less than the base income threshold, which is $90,000 for singles, $180,000 plus $1,500 for each dependent child after the first one for families. If you had a spouse for the full year, you do not have to pay the MLS if your family income exceeds the $180,000 plus $1,500 for each dependent child after the first one, but your own income for MLS purposes was less than $23,365 or equal to that. If you had a new spouse or you separated from your spouse during the year, you may be liable for MLS for the number of days you were single if your own income for MLS purposes was more than the single surcharge threshold of $90,000. You may be liable for MLS for the number of days you had a spouse or dependent children if your own income for MLS purposes was more than the family surcharge threshold of $180,000 plus $1,500 for each dependent child after the first one. The ATO works out if you pay the MLS based on the information you provide in your tax return. They will include this with your Medicare levy. It will show as one amount on your notice of assessment called the Medicare levy and surcharge. If the circumstances for yourself, your spouse, or any of your dependent children change during the year, you may become liable to pay the MLS. Changes in circumstances might relate to your income, your spouse, your dependents, or your private health insurance, for example. If you travel overseas and cancel your private patient hospital cover during that time, you may also be liable to pay the Medicare levy surcharge during that time. For example, Alex holds a Department of Veteran Affairs Gold Card and is entitled to full free medical treatment for all conditions. Alex's spouse Bert isn't in a Medicare levy exemption category. However, he doesn't have to pay the Medicare levy because his taxable income is under the Medicare levy low income threshold. Alex is therefore eligible to claim a half exemption from paying the Medicare levy. Christophe is a resident of France. He comes to Australia to work and earns income for short periods in the income year. His family lives in France, and he always returns to France when his work finishes in Australia. Christophe is considered a foreign resident for tax purposes and can claim a full exemption from paying the Medicare levy because he is a foreign resident for the full year. Debbie's taxable income is $27,000. She's single with no dependents and isn't eligible for any Medicare levy exemptions. She's entitled to a Medicare levy reduction because her taxable income is less than the threshold. In the 2022-23 income year, Eleanor didn't have the appropriate level of patient hospital cover. They are 35 years old and single without any dependents. Their taxable income is $117,000, and thus they are required to pay a 1.25% surcharge as a Tier 2 income earner. In summary, the Medicare levy is 2%, but low-income earners may be entitled to an exemption or reduction in this levy, while high-income earners may be subject to a surcharge if they do not have private health insurance. Foreign residents and those not entitled to Medicare benefits may be entitled to an exemption from the levy. If you're still unsure and would like further assistance understanding the Medicare levy, reductions, exemptions, and surcharges, you can book an appointment with the MLS Tax Clinic, learn more about the Medicare levy on the ATO's website, or consult a qualified accountant or legal specialist to help you assess whether or not you are entitled to receive a reduction, an exemption, or partial exemption from paying the levy.